Hello, financial investors, and welcome to the channel. My name is Brent, and today we are going to be doing our Monday buys here for the 10th of February 2020. We're also going to be looking at the three main indexes change for last week, the S&P, the Dow Jones, and the Nasdaq, and do a comparison between our portfolio and the three main indexes. We're also going to look at the portfolio, see our percent changes for last week, what positions were up, what positions were down, what stocks paid out dividends, and what are we buying today on Monday? I do have four stocks I was taking a look at. I am actually planning on buying two that are going ex-dividend here in February. And we're going to be discussing Simon Property Group. This is a retail REIT, real estate investment trust, that has been beat up shortly. It was on my buy list. It's in my portfolio. It is going ex-dividend in February. I already have the equity that I want at it right now, but I found an article, I was kind of reading through it. I think it's not in a bad position, but I will let you guys kind of let me know in the comment section below. What is your opinion of Simon Property Group with the information that's provided? And we'll kind of go from there. So if this is your first time here on the channel, I do appreciate if you would hit that subscribe button below. I cover the stock market, dividends, real estate, personal finance. If you enjoy the video, find it helpful, or just enjoy the content, definitely hit the thumbs up button below. And if you have any comments or questions going over anything in today's video, if I ask you a question, let me know in the comment section. Just drop something down there responding to the question or so, or just if you have any other questions going over this video, stock market, M1 finance, drop it in there as well. So with that said, let's go ahead and get into the video. So on all these three indexes, I kind of want to go and look at the 5-day change because they all pretty much have the same, the overall look. Monday through Thursday, they were all positive. We basically recovered all of last week's losses, putting the S&P and the Dow Jones in the negative for the year, and completely erased it. 5-day change up 3.17%, putting it now in the green by 3%. Now Friday, we have a bit of a pullback of 0.54%, but this is just normal trading day. We cannot go up and to the right day after day after day. If we look at the last month, the S&P has gone nowhere but positive up and to the right. Let's look at the 3-month period here. We had really no sort of activity up until December, and then as of December 2019, just up and to the right, up and to the right. Here we had a double bottom. This is actually a really nice strong signal. If we look at the past year, every time we've had a double bottom here, we had a deeper double bottom here, triple bottom, double bottom, triple bottom here, consolidated, moved higher, broke down, double bottom here, and blew the new all-time highs. And each one of these, as of this point, every day that we ended in the green was another all-time high, all-time high, all-time high. So to kind of look at today and say, oh no, we're at the very top of this market today, we may be expecting a pullback of, 10, 20%. It's really hard to kind of predict those things. We can go back even as far as 3 years, back in 2018, we were up and to the right. We did have a double bottom right here as well, and guess where we went? Up and to the right, and then we did fall. Now here is the only instance that I've seen recently of where we had a double bottom and we broke down, and that was actually offering a very nice discount at the very end of 2018 with Apple, Google, Amazon. So many positions were out there, really, really inexpensive. You can see the trading volume here very high at that low mark. So very nice and interesting. I would really like to see this market kind of break down, but I really don't see it happening now that I think the impeachment trials, that's all behind us now. President Trump's been, I don't know the word that they had, acquitted, I think it is. He's not going to be in trouble for doing anything. They didn't find anything wrong. I think that's very stock market positive going into the remainder of 2020. I do think that the market and just overall, I think that he will win his second term in presidency, which I think will prolong the bull market that we are currently in. The Fed is continuously pumping money into the markets. So I think that's all pretty much stock market positive. And I don't really see anything happening currently in 2020 or in the next few 3 to 6 months out that would really kind of break down this market so far. I don't know if the Fed's going to actually be doing another rate cut. Haven't seen a lot of that in the last few months or so. I haven't seen any sort of signs, but let me know. Do you think that in 2020 we will be having another rate cut of 0.25%? So all the other indexes basically moving the same way. Monday through Thursday, all positive. Friday, bit of a pullback there. Pretty, 1% there on Friday for the Dow Jones, but still 5-day performance up 3%. Year to date, about the same at, oh, okay, no, about a percent difference there of 1.98% in the Dow Jones. And the winner is the NASDAQ. The NASDAQ hadn't lost its year-to-date gains, whereas the S&P and Dow Jones did go into the negative for the year. The Nasdaq had not, and it put on 4% this week, ending up year-to-date 6.11%. So very nice. The Nasdaq has actually had the best performance over the past 3 years. If we look at the past 5 years, it's up 100%. If we look at the Dow Jones, the last 5 years, it's up 63%, and the S&P is also right there, about 61%. So Dow Jones is actually outperforming the S&P over the past 5 years, and the Nasdaq is at 100% there over the past 5 years, all these 5 years. So jumping over into the portfolio here. Over the past week, we didn't quite match the main indexes. This is up 2.3%. I'm actually fairly surprised because when I look at the changes for this week, I say Cardinal Health and Avi were up over 12%. Avi put on $91, Cardinal Health put on $96. Now, when I look at the losers for this week, the losers only lost 38, 14. That's, let's see, what, 42, 52, 73, 80. 80 some dollars, 85, basically $100 right here, lost between these positions in this area. Whereas our main winners up here, they put on $100 by themselves, $100, $100, and then it kind of broke down here. We can see the positions in the 47, 30. So I think this percent feels a little bit off to me, but we'll just kind of go with it. We did earn some dividends of $2.13. We had some market gains of $463.66. We're not quite back at all-time highs. All-time highs were just back on January 23rd. I think this week, as long as the market continues to move higher, just kind of recover, we should get into some new all-time highs for this portfolio, especially when we're buying some of these positions that have dipped recently. We'll maybe see some of that recovery here in the future. As far as companies that paid out dividends last week, we had quite a bit from ABM Industries, $2.01, AT&T, $10.72, CVS Health Corporation, $1.46, General Mills, $3.37, and on Friday, which that's not Friday, February 5th was Wednesday, that was $2.09. So we have $135.18. And we did add $115. $115.38 is how much we add every week. So we made roughly $19.65 in dividends last week, which was very nice. So we have that sitting in cash ready to invest here on Monday. Now I did do a refresh here earlier. The futures are appearing to go higher, so I think Monday will be pretty positive as far as starting out, but we'll kind of see how it plays out into the remainder of Monday. Genuine Parts also in the after hours moving higher, up 3.1%. I was kind of checking that out on Friday. I know Genuine Parts is one of the positions I recently added in the portfolio. It is down 6.89%, but doesn't include that move here in the after hours, about 3%. So it'll kind of erase some of that. And if we jump now into the overall losers of our portfolio here, we can see here that we have a few positions down in the red. I'm not going to be using M1 Finance to kind of glance over these. I'll be using my spreadsheet here that I've created that kind of shows the companies that are in the red. Plus, I've written down when they're going to be going ex-dividend. So, for example, I'll go ahead and zoom in here for all of you on the mobile devices. If I can find it now without it going speedy. So we have a few positions here that are going ex-dividend in February. Walgreens. We have Chevron. We have 3M. And we have Simon Property Group. Now, 3M and Simon Property Group are already at over $800 of equity invested in them. Our cost basis is 838 and 939. Now, I still think that they're really good companies. Simon Property Group, a lot of investors are kind of worried about this one. I've been listening and kind of watching and reading a lot of investors kind of discussing Simon Property Group and Tanger Factory Outlet, ticker symbol SKT, and a lot of them have seen that this payout ratio is over 100% now. It's at 113.53% dividend growth for the past 10 years and a very high yield right now of 5.96%. But these are real estate investment trusts. So a lot of the times, if you're looking at a REIT, let's go ahead. I was going to show, this is something I was kind of just doing some research on the other side here. But if we look at funds from operation for Simon Property Group, we'll go ahead and just look at the 1 year. So Simon Property Group pays out $2.10 per share each quarter. Recently raised it back in June of 2019. So they'll probably raise it again in June of 2020 by just a bit here. You can see they went from around 205 to 210. It's about 5 cents difference. Now their earnings has been decreasing slightly. I'll show you an article here where they kind of cover that. So they pay $2.10 every quarter. Over 4 quarters a year is $8.40 every year. If we divide that by their funds from operation, just that's the number you want to look at for real estate investment trust. That gives them a payout ratio of roughly 73%. We'll say 74% from their funds from operation. They have to pay out roughly 90% of their earnings or funds from operation to their shareholders. So they're still well under what would be considered risky as far as a real estate investment trust. Another thing I've recently saw is that they've really been kind of trying to turn their company around. Their free funds from operation did decrease slightly in the end of 2018. They were expected at 295. They came in at 296, which it met expectations, but it was 8.4% lower from the same quarter a year ago in 2018. They came in at $3.23 per share for that quarter. So they have decreased here in 2019, and that's with the issues with retail overall. We've seen some of the retail businesses themselves, such as Kohl's, J.C. Penney's, Macy's, Target, get kind of beat up here in the short term. I did see Target, Kroger's, Walmart make the recovery. J.C. Penney's and Macy's. I think Macy's is closing a bunch of stores. Kohl's, I think, is doing fairly well. But one of the things here I've been kind of looking at is that funds from operation did actually begin to increase. Oh, no, okay, never mind. They came in lower. So they came in at 1204, which was lower than the past year of 1213. Okay, so their funds from operation had decreased also. That's right, obviously, because this is per the quarter. They came in under the quarter over the year ago. So yeah, their funds from operation did decrease slightly year over year. Revenue had a slight increase there of 1.9%. One of the things down here that I was reading was the occupancy rate. So at the very end of December 31st, 2019, SPG, with their U.S. malls and premium outlets located around the world in Europe, Asia, etc., was at an occupancy of 95.1%. A 5% vacancy, I do not believe is anything to be really scared of in this current time frame. They've also been doing quite a bit of remodeling. So down here towards this little area here, that they have a redevelopment kind of project going on. They've had redevelopment expansion projects. They're doing this in more than 30 of their properties located in the United States, Asia, and Europe. So these 30 properties are also going towards that percent vacancy. They're vacant. You can kind of claim the loss on those vacancies during those months during the construction. So I think it's kind of interesting. I think they still have a really good occupancy number. I think that they're trying to change around to what current people, buyers, shoppers currently want. I don't know. I don't really go out to the malls myself anymore, but maybe we could see those those buildings get turned into something a little bit more useful. We'll kind of see how it kind of plays out. And we already kind of discussed their dividend payout from funds from operation. So overall, I did see that Zacks gave them a sell. So here, currently, Simon Property Group carries a Zacks rank of sell. I don't think it's in a bad position. I'm not adding any more myself, actually, but That's because I've met my $900 sort of threshold that I want for this position. So I just want to kind of quickly cover SPG, where it was at, the occupancy, the earnings kind of falling over the past year, and why it may be trending down here in the short term. We'll kind of see how it plays out in the future. Now, the other positions, 3M also has that $800 and $838 here in the short term. I think it's still a strong buy. If you are interested in 3M in this current time frame and just haven't made that bite, I think it's a good leap into the position starting wise. If you look at the 1 year, and I got to get rid of funds from operation. So in the past 1 year, you're getting 3M at 52-week close essentially. It's at $160.08. Whereas its 200-day 50-day moving average is slightly above it at $9 and $11. It has a nice starting yield of 3.6%. I've seen PPC Ian's channel discussing 3M, buying some more of it. I am not going to be adding any more at this current time frame. I am focusing my buys on Walgreens and Chevron. Chevron is going ex-dividend on the 14th, which is Valentine's Day, I'm pretty sure. You know, my wife would smack me. That's this coming Friday. So if you want to be buying Chevron prior to the ex-dividend date, definitely buy it on Thursday or prior. That way on Friday, you can hold it and you will earn those dividends. Also, Walgreens. Walgreens is going ex-dividend on the 18th. So that is not this week. That's next week on Tuesday. So you have it this week to buy it, and you have Monday to buy Walgreens if you're interested in checking this one out. And it does go ex-dividend on next Tuesday. So you have another this week and then Monday of next week to kind of buy this company. Now, Walgreens and Chevron have also been beat up here in the short term. You can see Chevron having dipped to about 100, and I don't know where it was at recently. It kind of happened this week. So February 3rd, just this past week, it fell down, had a low of say $103, $104 before recovering. Walgreens also had a low around $51. I did buy Walgreens this past week. If you watched my last week's video, for Walgreens, I bought Walgreens here at $51.23. I also bought Chevron at $106.81, and Chevron is now at 108. So I'm actually buying just a little bit below. Oh, yeah. No, I bought it last week a little bit cheaper. So it has came up slightly from where I bought it here on Monday on those dips. And I do see the market kind of recovering again this week. Oh, there it goes. Stock futures moving down a little bit. So we'll kind of see how this kind of opens up. I don't know. We might get a bit of a discount again on Monday if the markets open lower. I can even buy potentially cheaper on these ones, but they're not that much of a discount. Walgreens is only down 0.25%. I'm only down $1.48 from where I initially started buying this one. So I'm just kind of been averaging my position down, and it's got me down now to a very low amount. Chevron, I've also been buying this one down. It's down to 4.52%, or roughly $20. So this one's also paying me out dividends of $20.96 every year. Walgreens here at $19.95 every year. So very nice, very nice. But I don't want to make the video any longer. We're at 18 minutes. So what we're going to be doing is going and buying these positions now. So I'm going to go ahead and go and target these positions. I'm actually going to split this in half. So I think that's what, 135 by 2 is 70, 73 or something like that. 135 by 2, oh, 67, 67, okay. I was off there. So let's look at Walgreens. Walgreens is showing positive right now. This is because of the dividends that have been paid out. So here we're actually seeing market gains is down. So if I buy this position, I'm actually buying it down, lower my unit cost there, increasing my yield on cost by just a smidge there. So we'll go ahead and buy, throw in our number there of $67.51. Continue and confirm the buy. And then we'll move over to Chevron. We'll do the exact same thing. We'll just kind of add the remainder into this buy. This one's actually a little bit deeper discount than Walgreens. So we'll just add the remainder there of $67.52 and continue and confirm. So those are my Monday buys again, but we covered additional information. I know a lot of investors were interested in 3M. I think 3M is actually a really good buy at this time. It's actually a deeper discount than my Walgreens and my Chevron combined. So 3M is offering a 13.64% discount. It's also offering a higher starting yield versus Walgreens at 3.44. It's offering a 3.66. Chevron is offering a slightly higher one at 4.52. But of all of these positions, which do you think is the most riskiest position here? Or the least riskiest position? Do you think Walgreens is in a position for the most growth in the future? Do you think Chevron is in a position for the most growth in the future? Or 3M? Let me know in the comment section below. I would really like to hear from you guys. Which position do you think is in the least risky environment, offers the best products, the best services, the best, service, etc. So that is going to be it for today's video. If you guys are interested in checking out this article on Simon Property Group, go ahead and check out the comment section. I will have a link to this article in the comment section, and that is it. Thank you all for tuning in. I will see you next time. Remember to subscribe, hit that thumbs up, and drop me a comment. Bye bye.